Hello, hello. Welcome to Money Mondays. We are here again. We are so happy to have you guys. Thank you so much for tuning in, everyone here and future listeners. We are very excited. We are now on Apple Podcast and
Woohoo!
also on Spotify. So you can find us there at Kels and Betsy. And hey, for you guys that have noticed the little quirk in our logo, we love it that way. Okay. It was on purpose.
Right? Like, I'm so excited that we're now available. Like, persons can now listen to us on Apple Podcasts and Spotify. Like, that is amazing. So, if you can't join us live, just be sure to subscribe on YouTube. Go on Apple Podcasts and Spotify. Follow us.
I need
Listen.
to say something about that, girl. Oh my gosh. We are like so close to 100 subscribers on YouTube.
Woohoo!
We are
We're
so
like at eight,
excited.
nine right now, I think.
The support online has been amazing. You guys are rocking. Like we feel the love. We
Yeah,
feel the love.
because we've been doing this in like less than a month.
Yeah, we have. I was looking at our YouTube, the studio thing, and
Yeah,
it said started March 31st, and
it's like
I was like, wow, already, and like we only post these lives.
that's it. And we're trying. I think we're trying to just keep the momentum going, keep recording more content, and just provide as much value as we can to you guys. Because at the end of the day, this space is just to share our knowledge and bring persons here who has way more experience than we do, so we can all benefit from the info that's out there.
Yes, learning together as we go. And yeah, we have 10 more subscribers and we'll hit 100. So we're
Woo! Can't wait for
very
that.
close.
We
I
can't wait
know.
for that. So, guys, if you haven't subscribed us yet, make sure to subscribe after this video, like this video, watch the other videos that we've done. There's some really good gems in those videos, so check those out. So, without further ado,
Yeah.
we want to introduce our speaker. He's like laughing in the background. I can see his face right now. Daniel Chun. We're gonna bring him up to the screen. You want to do a drum roll, but it's like an invisible drum roll.
I only have one hand today. Sorry, guys. For you guys listening, I'm holding my mic today. It's for
Uh,
you guys listening in the podcast.
no. So Daniel Chan, welcome, welcome. Thank you so much for
Being
joining
here.
today. Like, we appreciate it. We know you are an investor. You're also a private money lender. You own rentals. But for those who don't know you, like, who is Daniel Chan?
I work. I don't know. Feel like I'm that great at a real estate investor. I have a W-2 job, so I'm pretty busy trying to. I own. I got started in real estate a couple years ago. I think in 2020 was actually the worst time because I we bought a short-term rental and the pandemic happened and everything shut down. And then
Wow. I mean that's amazing. I know the question's pretty intimidating. Kalisha asked me that too this over the weekend and I was like, who am I? But that's amazing. You did a short-term rental right before the pandemic. How did that work? Like what happened? Did it go
it,
well? I'm guessing you did.
the first couple months didn't go that well because everything was shut down. It took us a while to get furniture, but
Yeah.
after everything solidified, probably around like the April, no, like the April, May timeframe. It actually went really well. And then we ended up getting bookings. Like we were like, okay, we just want to pay the mortgage. And we had our prices probably way too low. And then I think we were booked a month and a half out pretty quickly. And then we actually ended up jumping into a second rental probably within a month and a half after listing on Airbnb.
Oh, not bad. See,
That's amazing.
and then look at that. That was like 2 years ago. Look how time flies. Like, time really flies. So it's like for persons who want to invest and they're like, no, I don't want to do it now. I'll wait later. Like, time waits on no man. Like if the deal makes sense, just do it, and you will figure things out as you go along. When you hit an obstacle, like you will work on trying to find a solution, but it won't be there forever.
Yeah. And I know that I was looking, I always watch videos for entrepreneurs, and it said that, like, if you don't have problems, you're not an entrepreneur.
So that's the way how you navigate everything and dive in. But
Yeah.
let's jump in. Let's get to know um, Daniel. Today our topic is what lenders. No, I forget what our topic is.
What lenders are looking for when they're going into a deal, partnering up with us on a deal?
Yeah. So the first question that we have for Daniel today is like, well, we covered how he got started, but what we would like you to do is like tell us like the first deal that you lent on. Like give us a background. What was the deal? What was the exit? And how was that deal structured?
Yeah. Do you
You got a
remember?
little choppy. Hopefully my audio is not terrible, but
Or just
or my internet connection. But the first deal I had, I was part of an exchanger group. I think I saw Kalisha as part of another exchanger group, but I was part of an exchanger group, and someone said that someone was looking for funds to build out on an ADU for their property so they can increase their cash flow, basically house hacking their own house. So
What is
I
an
figured,
ADU?
I think an auxiliary dwelling unit or additional dwelling unit. I think that's what it
yeah,
is.
yeah,
But basically, like converting their garage into a rental.
Oh, nice. Okay, yeah. I know what that is.
yeah.
And then?
So their property was in California where rents were pretty high. So I think they were able to get quite a bit for their ADU once they rented. So I ended up using a couple months prior to that, I decided I wanted to get into note investing, and I converted my retirement accounts to a self-directed account. I ended up having idle funds because I didn't know what to do with it. So I was like, well, this money is just sitting here right now doing nothing. So I went in, I felt like my position was fairly secure because they lived in the property. They didn't want to get foreclosed on. And once they built the ADU, they could rent it out for far more than my payments were, or their payments to me were. Their interest rate that I got for it isn't fantastic, especially because like the rates,
Oh, it is right
because of
now.
how rates have increased.
Yeah.
But the way I look at it is right now it's at least guaranteed income, so it's really not that big of a deal in my opinion. Like every month, money just appears into my retirement account, so
Oh, that makes sense.
it's been
So
pretty nice.
with that one, then you said that you actually had a 401k and then you set up a self-directed IRA, right?
Yeah, that's
How did
yeah.
and then with that deal, what was the so the entire deal that exit was a rental?
So it was their primary residence, but I think they built out part of it into a rental. So I think they
Mhm.
converted like their garage into a rental, so they could generate like I think it was like $1,500 a month in cash flow.
What made you move? What made you say yes to them? What was it that enticed you to want to lend on this deal?
Yeah.
I think with what mainly made me say yes is that I felt like my position was secure, that I was bringing that there was plenty of equity in the property to begin with, and then especially because California prices
That's so high.
skyrocket, and they bought it at a pretty good rate. And then there was also another investor that was actually coming in the deal, so he wouldn't want to get his IRA foreclosed either. So it's kind of that's the main reason of why I felt like my position was really secure in that deal.
Okay.
I don't
Was that
traditionally lend in California, and I probably wouldn't have otherwise. But
because I know like from our conversation, I know you like landlord friendly states. So that was gonna be my next question too,
Yeah.
with you going to California. Um, what about like in terms of the deal itself? Was it like an interest only payments for like 6 to 12 months, or was it a deal where you got equity in the deal? Tell us a little bit more about that portion of it.
So, like, since this was an investment property, it was just interest only payments for at least a guaranteed 6 months. So even if they got their project done in 3 months and they refied out, I would at least be guaranteed that 6 months. So there was a minimum return. And that's kind of one thing that I've starting to look at when doing investments, that some things, like if someone just wants to lend for like 2 months, and I think a couple of people have approached me about like just 2 or 3 months, I'm like, well, feel like I have a minimum return that I need to hit in order to make it even worth the risk. Like if I'm only making like $1,500 for deploying cash, then I don't know if that's really worthwhile.
No, that makes sense. So with even like looking on a deal as well, is it there are specific exits you try to stay away from, especially in the market right now, or would you just lend on anything as long as it makes sense?
No, I definitely will. I like to avoid like fix and flips, things that, and other strategies that require like a refinance, because like a year ago we were at probably 4% interest rates. Now we're at like 7 to 9. So a lot of people are like, "Oh, I'm going to like burr this," and I'm like, "Well, then I'm not going to put my funds in this because I don't know that your equity is going to be there." And then I figured that the property values are going to decrease. So like right now, it's very hard for me to find a deal that's worth lending on.
Well, piggybacking on that, do you have a lean position that you prefer? Because I know that fix and flips are usually like first lean, right?
Yeah.
The one in California sounded a little bit more creative. Um, what lean were you on there? What lean position?
A lot of these are second position leans,
Mhm.
and yeah, I feel like that's much higher risk. I think ultimately I'll want to be in like first position. So my strategy is probably going to be to like create like
Creative.
first position notes so that I'm sitting in first position. That way, and usually my ideal strategy is going to be like to a homestead buyer. So to look at the wrap options,
So
but
you buying them yourself would be.
well, buying them and then selling them on a wrap so that I'm in first position is going to be my ideal strategy.
And then
But go
go,
ahead.
go ahead, Dana. You can finish.
But like for some of these that are like short term, it's just I'm sitting in second position and I want to make sure that there's enough equity in the deal that if I need to foreclose, or like I don't want to foreclose, I want to make sure that the property is good, and I want to make sure that the people that I'm working with are like reputable and
Mhm.
that they have good references behind them. And I think that's why I joined that first deal, that I knew there were a lot of people that would endorse this person. So I felt like I was in a good position there.
No, that makes sense. And for those who don't know, when we're talking about with the difference with first lien, second and third lien, is just that, let's say with a first lien position, it's a higher risk, but in that way you're more, your funds are more secure. So if anything happens and the borrower dies or they disappear or anything, once that property is sold, the first position lien holder gets paid out first, and then the second position lien holder gets paid out second. So I'm glad Daniel even brought up the point where he talks about if he's gonna be in second position, there's enough equity in that home. So if he should foreclose, there's a way that he know that, okay, I can get my money back. So that's a great point that you mentioned, Daniel. A lot of lenders don't even consider that portion of it. Some persons are just okay with being in second lien, but that's a valid point right there. Which I think you mentioned something else at the end, and I was like, I want to ask you about that so much, and now I forgot my question. I forgot it, but I think you mentioned. Oh yes, I remember. You mentioned about the lenders in California, and you said that they were reputable, and they could have gotten the job done. Which leads up to my next question. Yes, the deal is good, but apart from that, like, what do you look for? What in a borrower to make you say, okay, I think I want to lend to this person, especially to someone who you don't know at all.
I think it'll be difficult to lend to someone you don't know at all. And I think one of the big things with lending is that you need to develop a relationship with those people. You need to know who you're lending to.
Yeah.
So, like, I know a lot of people preach, oh, you can get in a deal with no money. Well, you need to have a relationship with people that have money in order to make that work. Like, so it's really hard to like vet those people without an existing relationship. There's a lot of people that come to me and say, hey, are you willing to do like private money lending? And I'm like, this is the first conversation we had, and that's your first question. And then they're like, at the end of the converse, after the end of at the end of the text, they're like, oh, what was your name again? And I was like, you took no effort to get to know who I am. Why am I going to lend to you? Like, just like in like, I don't know. I felt like in grade school, if you lend someone money, like you may or may not have the expectation of getting that dollar back. Well, we're playing with zeros here,
Yeah.
so I'd rather not deploy all this money.
No, that makes sense. So, like, if for a completely new borrower, like, I want to take Betsy's mic now. I think I'm too low.
Well,
For someone who's completely new, what tip would you give them who, if they have a great deal, no money out of pocket? How would you approach something like that? Like, this is a deal that you would really love to do, but they're completely new. There's no relationship. Um, what recommendation would you give to that borrower?
I think they need to show that they have experience, like experience even doing something. Like the game say it doesn't have to be in real estate, but it actually shows that they've had experience starting a business, or yeah, I built up this somewhere else. I just decided to get in real estate in my first, I don't know, rental here or Airbnb, something along those lines. So some experience. I feel like a lot of people have joined real estate in the last like 2 years and felt like everyone can make money, like not just investors, but like real estate agents. Like I feel like the last 2 years, my 12-year-old could have sold a house by, but with like the change in markets, it's not as easy.
Yeah.
So like providing good underwriting and like going through that process and like looking at all your options, I think is a good starting point. A lot of people just say, okay, this is what my payments are, this is what I'm looking for. And I'm like, okay, you've given me like zero information. Like it's not even worth me continuing the conversation to like fish for the details. Like if you can provide me some details, I can say if I'd be open to this or not. And it's not even like, it's not because and I don't even lend on deals that I can say are probably good deals and will have great returns, because like I don't have an infinite amount of money, like that's all limited.
Yeah.
But
talking about infinite amount of money, where do you get your funds to lend?
some of it is from my IRA, some of it's just savings that I have. And I think at some point you guys mentioned like an equity line. I have like a home equity line that I've done like some short-term lending on.
So guys, you literally just heard. There's so much things that Daniel just shared with you guys, and I just hope you are taking notes, because the first thing I really want to touch on is he mentioned the relationships. And this is why every private money lender is different, because some really just, it's all about the return. Some persons are willing to lend on properties because the numbers are there. They don't really care much for the relationships. But for Daniel, the relationships are key. And especially with how things are going now, we're seeing a lot of lenders are diverting to that. Like, they need to have a relationship with the borrower as well first, especially if the capital is like a really large amount that they're like, nope, we need to have, I've never done a deal with you. Tell me about your experience. So relationship is really key. I think Betsy and I, we always talk about that.
It always ends up being a topic of conversation for us, just those relationships, how important they are.
Yeah, like don't just post, like don't raise capital when you have the deal. You should always be raising
Raise
capital.
capital.
People like people forget about that stuff. And one thing when Daniel mentioned that persons will actually just post deals on Facebook. Oh, I need $100,000 for 6 months at 12%. There is nothing there, and then you're losing potential lenders who may have seen your request, but there's no info about that deal. So that's why even with us when we're raising capital, we try to provide as much info as we can about that deal, a background about the borrower and the us as well, so the lender know who that they're working with. Then for you as well, do you do your own underwriting or your due diligence, or do you have a team helping you to do that?
No, there's no team. I do my own underwriting. Like I'll look at their deal, kind of look at the area that it's in,
Mm-hmm.
and then kind of see if it'll work out what their if everything looks good.
That makes sense. Do you need help with anything? Maybe we can help you find someone to help you underwrite, to source you deals or anything like that. Want to provide value.
I'm sure if I get right now I haven't done much lending, but if I do more lending, I'm sure that would be I'm sure I could use help find well, I think I'm looking to like acquire more properties or more deals
Are
rather
you
than
doing it
doing more
by
lending.
by equity, by lending and trying to get equity, or are you looking for these deals yourself?
I think I would like to get equity in deals. That's probably what I'm probably more looking for than more than just the long-term cash or I don't have the time to like go hunt for all the deals like some people do. There's tons of people that are like direct to seller, calling people all day. I
That's a lot.
don't have. I think I've tried that, and I think I've tried like squeezing in time and like setting up campaigns. But yeah, if I'm able to get deals, like we can like JV on deals or something, I think that would be more ideal for me.
No, that makes sense, and I don't blame you. Like I tell Betsy and I were talking over the weekend, like with a few colleagues, and we're like, we just don't like the acquisition part and calling sellers. But then you have some people who they really enjoy doing it.
Yeah, we they went door knocking and we were like, they're like, hey, you guys, do awesome. Support it.
So we love raising capital. That's our superpower.
I'll knock doors to raise capital. Yeah.
So we that's just our superpower is raising capital and just sharing our knowledge, what we've learned, sharing our journey. And we're literally learning along the way as well, because
Mhm.
we're getting to know you as a private money lender. We're hearing your perspective as well, because everyone is different, you know.
So,
Go ahead, Betsy.
Daniel, I want to ask you one more thing. If someone came up to you and just told you, "Hey, like, what are you looking for specifically if you were to land on a deal right now? Like, what is your ideal, perfect scenario?"
Oh my goodness.
If I were to land on a deal right now, I don't know. It's hard to say that I would deploy cash right now, and I think it would be like who I'm lending with. I think it's also more the opportunity for like someone posted like probably within the last hour about a deal that they wanted funding for. And I'm like, I don't want to lend right now, but I would lend for the opportunity to go work alongside them and learn how their deal works. Just like learn how them and their team work. So that's kind of one thing I would look into. And I
You
think I
really
started getting into lending more as a strategy of like this was not going to be my end play. I think it was going to be a more of learning how other people operate and then acquire deals on my own and see how they do business,
Mm.
and then while kind of deploying a little bit of cash here.
You heard it here, guys. Remember that value. That value is so important. Bringing that value and just being able to bring it everywhere you go. Just that's
No, that makes so much sense. And I can't even I would even repeat what Betsy just said, but you just got to bring value and present the info. Like, I think one thing we've seen as well, I don't know if you've seen this, Daniel, where persons, if they're looking for lenders as well,
oh
they
yeah.
overestimate the numbers.
Mm-hmm.
Like present, I would say, like, from I always tell a person, like, what does the worst case scenario looks like? In terms of, if anything happened, is the lender money still protected? Like, worst case scenario, try not to present like the best case scenario. This is it. If you do Airbnb, the top notch number, the best rent. What other tips would you give a borrower as well when they're presenting the information or looking for funding? Like, any tips in general?
I think one thing you're asking about the borrower, right?
Mhm.
I would probably want to know about like the area that it's in. And I say this because I found out that I have a family member that I think did hard money loans in 2006 through 8, and they ended up holding a couple of properties. So like people were never able to like execute on those properties. So you kind of need to know what their experience are. You need to know, like, kind of like you were saying, you need to know all the worst case scenarios. What happens if the market dips 10%, 20%? Like, you really have no idea what it's going to look like, because if you look at rates now, I think if you took the rate a year and a half ago and compared it to now, like your payments almost double. So like in theory, your house price would have to double or cut in half in order to get to the same payment.
Mm-hmm. Mm-hmm. No,
So
you're
you need to look at all these different options. Like, I don't know what the market's going to do, and you need to have multiple exit plans on how to get the funds back.
No, that makes so much sense. Because see, there's so much tips right now, like what someone like Daniel will be looking for, what you guys should include in your presentations or whatever your deal breakdown. Like, just take the time, put everything together, and present the info. Before we even let Daniel go as well, Daniel, is there anything else, any info that you would love to share with our audience or our listeners, before we wrap up this conversation?
I think one thing that people need to realize, or both sides, is I think people think that, oh, this is a 12% return. I'm like, nothing is guaranteed. So yeah, you need to. There's a lot of risk involved, and make sure you're secured by like a deed of trust or in a promissory note, and realize that the promissory note is not recorded, and so you need to maintain a record of that.
Yeah, no, you're right. I think the documentation process, finding out lenders are ignoring, they're leaving out the note as well. They're just using a promissory note. So they're not even recording a lien. So that is like very risky. Like, I was talking to someone the other day, and I think they loaned out almost 100,000, and they just had a promissory note. And I was like, how did you do that? And they're like, oh, it was a return. So they funded the deal because the return was super high. But I'm like, how is your money secure? Like, what happened worst case scenario? Like, how do you make sure you get your money back? She's like, oh, I have the promissory note. And I was like, no, that's not sufficient. So I think as well, like, lenders, just make sure you have the right paperwork itself. Get an attorney involved. Don't let someone just send you over paperwork and you say, yay, it's good, and sign. Get someone to review those paperwork to make sure your money is secured and you're protected. That is
I'd
super.
also make sure that you're directly in contact with title. Like, make sure that you have direct communication with them so that like some people, it sounds like some people that are new to lending or don't want to or don't know that that's part of the process.
Hmm.
I would want to know just so that you know where you're wiring funds to.
Yeah.
Yeah,
Thank you for saying that, Daniel.
yeah,
I think a lot of new investors don't know to do that. We are constantly reminding them, hey, call title. Make sure title knows you check all the information is correct.
yeah,
Double check it. I mean, we also check it on our end, but we definitely want our investors to be doing their own due diligence because, of course, we're not certified in anything.
yeah. And it's a risk. It's a risk, and everyone is involved. Everyone plays a part. Just to make sure we're being honest,
Hmm.
we're protected. Worst case scenario, and that's always key. Like, what happens if things go south? Like, do we have the right paperwork to make sure everything is good? Because I think we've seen where lenders will just send. We have cases where lenders would send funds directly to the borrower.
Oh yeah, don't do that.
So that we always say, like, if it's a relation, you have that existing relationship,
I
and
still wouldn't do it personally.
I've had lenders who have done that before, but that was like we have a long term relationship. So it's really up to, it just goes back to the relationship. That's the main
Yeah.
thing I say. But if you don't have that trust yet with that person, go to title. Send things to title. And a thing to the borrower, you're protecting yourselves
Yeah.
because you don't want anyone to say, "Oh, I sent you my money." Da 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 da. Like, like, protect yourself, protect your reputation, your name, just to make sure you're being ethical as well.
Yep. Make sure everything's recorded.
Mhm. Yep, yep. And it was like, yes, guys, take notes.
Take notes.
Take
Pen and
notes.
papers.
Daniel is dropping some gems today. Like, these are some great info. Just hearing it from a lender himself, like, that is, thank you, Daniel. We appreciate it a lot.
Mm-hmm. Yeah, your experience means a lot.
Yeah. Is this going on? Okay, came back. Okay, perfect. Well, Daniel, thank you so much for being here.
Joining us.
Knowledge. Yes. It was a pleasure having you on Money Mondays. Guys, if you're listening to this later, if you're listening or watching to it right now, make sure you like this episode, you subscribe to our channel. We are live every Monday at 5 p.m. EST. And you can follow us also on our handles, Kels and Betzy, on YouTube. You can follow us on, what is it called?
Apple Podcast and Spotify. And
Exactly. So
you
thank you
guys,
guys.
and I did want to speak a little bit this weekend. We will be at RPM in Long Beach, California. So we will be having content there. We're also planning to do a little surprises over there. So definitely, you should follow us to be
Yeah,
able to be part of what we are doing.
exactly.
We definitely want to bring you on this journey with us.
Yes. So see you guys, and thank you guys for joining us. Have a fantastic Monday. Hello, Tony. You're just joining in.
I know. I wanted to shout out the Hema too. Thank you
Oh,
for being here, you guys, and commenting. Your support means so much.
yeah, we appreciate it, and everyone that was watching us for the entire time.
Yeah.
Again, thank you, Daniel, for joining us, and we'll see you guys next week, Monday. Bye, guys.
Thank you.